Back to another episode of the Coffee Hour. Today we're going to be going over a lot of stock market news. I got to have my blue blockers, man. These screens be killing me. So a lot has happened. All right, I haven't streamed in I think the last 2 days or so, but man, has a lot happened. The market has been going crazy. As a matter of fact, ever since I dropped a ton of money into a tech focused ETF, I was kind of a little ticked off because, as soon as I drop it in, of course, there would be a 5% decline, which was a lot of money. Like, I think I was down 10 grand right off the top. As soon as I dropped the money in, the next day, it was just dropping 5 grand and then another 5 grand. So these last couple of days were definitely rough in the markets. I'm glad to see that things are starting to kind of get back to normalcy. But, with today's news, I think we're in for a lot more of a bumpy ride these next couple of days, especially going into March, because there's still a lot of uncertainty surrounding, not only tariffs, because people thought, we're like tariffs were off the table. We don't have, nothing to worry about. But, then they popped right back up, which caused, the markets to react. Again, gold was outperforming all asset classes. Bitcoin is going to hell. So it was quite a few days these last couple of days. So we'll get right into it and more. Let me just get a quick sip of coffee before we get started. All right, let's get into the news, guys. All right, so we're going to start off with our boy Donnie. Trump vows to slap 25% tariffs on EU and claims the bloc was formed to screw over the US. All right, so now we have, more tariffs that are going to be on the table. And again, this news just dropped not too long ago. Let's see when this article actually dropped. I don't see it here. But yeah, this did just drop. Donald Trump has threatened to slap 25% tariffs on the European Union, claiming the 27-country bloc was formed to screw over the United States. Speaking at his first cabinet meeting on Wednesday, the U.S. president said he would soon release details of the latest tariff threat to the EU. We have made a decision and we'll be announcing it very soon. It'll be 25%. It's going to be big. He said. He didn't say that. The EU vowed to respond firmly and immediately to unjustified trade barriers, signaling that it stands ready to retaliate swiftly against the new tariffs. So already right off the block, as soon as we get, as soon as the markets start to calm down a bit, we got tariffs on. And I think this is just classic Donald Trump playbook style stuff, right? Whenever the markets start to get calm again, he throws in a wrench to just rile up the markets. When he made the comment not too long ago about Mexico and Canada, going through with the whole tariff thing, what was fascinating about that was not only did the markets go crazy, but I read from another commenter and it kind of made sense. He was like, this is classic. He'll just make the comment, the markets will go crazy, but people won't know that Canada and Mexico has already moved forward with implementing, the plan to place 10,000 troops at their borders, right? To stop the whole drug trade and to stop, the illegal immigration and all that other stuff. So again, we're not going to discuss domestic politics on this channel, but it was really interesting to see a comment like that because, you kind of see it here right now. As the markets were calm, as everything was going smoothly, we get slapped with a whole 25% tariff news on the EU, which is one of our biggest trade partners. So this was interesting. And I think because of this, we're going to see, the markets are going to react. The markets are going to react big starting tomorrow. So, tomorrow you guys time Eastern Standard is Thursday. So I think we're going to be in for a choppy Thursday and Friday. So we'll see. Will the markets go down further? I think that's definitely a possibility. And I think more investors are going to flock to bonds and flock to gold or flock to safer assets. I think even REITs, investors are going to flock to REITs, in my opinion. All right, so let's continue. Trump sows confusion on tariffs for Canada and Mexico, floats 25% duty on EU goods. We are kind of already covered the EU piece. But again, Canada and Mexico are back on the table. people thought this was a done deal, didn't have to worry about it. Not entirely true. U.S. President Donald Trump on Wednesday raised hopes for another month-long pause on steep new tariffs on imports from Mexico and Canada, saying they could take effect on April 2nd now, not March, and floated a 25% reciprocal tariff on European cars and other goods. A White House official, however, said that Trump's previous March 4 deadline for the 25% tariffs on Mexican and Canadian goods remained in effect as of this moment. This was the comment he made a few days ago, pending his review of the Mexican and Canadian actions to secure their borders and halt the flow of migrants and the opioid fentanyl into the U.S. So, like I said, there was a comment. I didn't really look into it much, but there was a comment made that, Canada and Mexico have already, implemented their side of the house, their side of the deal and placed troops there. So we'll see what actually comes of this. Again, I think this is going to rile the markets again after we just went through this slump. And I think it's going to be, again, more of a rough ride. So we'll see. Trump sowed confusion during his first cabinet meeting on Wednesday when he asked about the timing for the start of the duties for Canada and Mexico and replied that it would be April 2nd. So there you have it. All right. And that was pretty much that news. So moving on to stock market news. All right. NASDAQ X out gains, S&P ends a little change ahead of Nvidia's pivotal results. So Nvidia, and we'll talk about Nvidia here in a second, but Nvidia was going to be the biggest factor in how this week or how this day played out, right? If Nvidia came in under, expectations, under earnings, the market was going to go down further for sure, absolutely for sure, without even a second guess. Like all eyes were on Nvidia, and I wish I saved some of the memes because the memes were gold. But there was one like Obi-Wan save us, but it said Obi Huang or Huang or whatever his last name in Jensen's last name is, save us. So it looks like Nvidia pulled it out. They were able to make a lot of money for this quarter. The only thing that didn't meet expectations and actually came under expectations was their gaming sector. So consumer confidence came in weak yesterday, and we have seen for the first time since October 2022. Oh, actually, let me back up a bit. Yeah. So, anyways, before we get into the whole Nvidia thing, this I found was actually rather interesting. So consumer confidence came in weak yesterday, and we have seen for the first time since October of 2022 the 10-year yield on treasuries drop below the 3 months note yield. That is a case of the yield curve becoming inverted, writes Daniel Jones, who's a leader of the investing group Crude Value Insights on Seeking Alpha. And while not a perfect indicator, it has been pretty solid indicator in the past of a recession occurring. This all points to challenges that lie ahead, and any investor that has riskier opportunities in their portfolio or opportunities that are tied heavily with international trade might want to approach this matter cautiously. And as we just saw or read that, there is tariffs incoming for our biggest trade partners, right? So that's what he's writing. And, I was just curious because there's always these talks about, recessions and massive drawdowns and a flat, decade and all this stuff. In my last stream, I covered the Bank of America writing out a paper that's basically detailing that we are overexposed to the Magnificent Seven, right? We are overexposed. They are hyperinflated. They shouldn't even be trading at these valuations, all this stuff, right? And they're bringing up the fact that, the Magnificent Seven could be the same as the Nifty 50 in the 50s, or even the ones before the dot-com bubble burst, right? Their paper is basically advocating that investors should really consider investing into an equal weighted S&P 500 index fund, right? Because if you look at the current S&P 500 index fund, it is like 30% weighted just to the Magnificent Seven. All right, that's the FANG plus Tesla and Nvidia, because Netflix was part of the FANG stocks before. So it was Facebook, Amazon, Apple, Netflix, Google, and then they added Nvidia, and then they added Tesla. So the Magnificent Seven. So, they're saying we're overly exposed to that. And if any of those companies really have problems or growth issues in the next, decade or the next couple of years, then basically we're going to trade flat. So that's why they were advocating for, investors seriously considering a equal weighted S&P 500. So that was just really interesting. So this 10-year thing, let's take a look at this 10-year thing, because this is also pretty interesting, I thought. So if we look at the last recession we had in the United States, which was known as the Great Recession, which turned into the the GFC, the Great Financial Crisis. I wanted to know when it actually started. That's what started this. Okay, so the combination. Well, where is it? So it actually started the Great Recession actually started in 2007, right? December 2007. Where is that? I saw it in here somewhere. Anyways, I did see it in here somewhere. I'm missing it right now, and I forgot to highlight it. This is, right here. Duh. Yeah, so it started in December of 2007, right? So, just based on this article here, he's saying that, whenever the 10-year treasury drops below, a certain threshold, that is an indicator for a recession or a potential recession, or we might even be in a recession already. We don't know. So let's look at the 10-year, right? This is a 10-year treasury, CNBC. This is what I always use to kind of get a weather gauge of, mortgage rates or, interest rates for real estate. And this is usually a good weather, a good barometer to just look at from time to time, especially if you're invested into real estate or real estate investment trust or REITs. So I like to look at this from time to time, but well, actually a lot. But anyways, if we look here in 2007, I can't drill down, deeper than that, but you can see like from November 2007 to January 2008, it was below this line, right? It was below this line. And then over the next, basically all the way up until 2020, up until CV19, it was going low, right? Because you had this happen right before the recession. Then the recession happened, 2008, 2009. It took about 18 to 19 months for us to recover. And then we kept interest rates low, so the whole market could recover. We could get out of, a recession. And then this created, the stock market to reach all new highs because money was so cheap. Money was extremely cheap, right? So this is what caused tech companies to just be able to profit and grow like crazy. This is what, allowed for real estate investors to get those super low interest, mortgages way back when, after, post 2008, 2009. And this just, this went crazy. And then, here comes CV19, and then they drop rates to basically zero, right? For a period of time. And then it climbed up over the last couple of years because we started dealing with inflation. We started dealing with, costs and goods of services going crazy, and, rents climbing like crazy, etc. So I just found this was fascinating just to see it. Because he's talking in this article, he's talking about the inverted curve. And I always heard this term and I never really truly understood what it meant. But I believe this is what he's talking about when we're talking about like the curve inversion right here, right? I'll cover kind of the 5-day here in a minute once I get into the real estate segment of this show. But yeah, I just wanted to cover that. I just thought that was fascinating is all. Just to actually understand what people mean when they talk about that. So anyways, all right, let's move on, guys. Okay, so let's talk about Nvidia. So Nvidia finally, they came in, they saved the stock market. We didn't continue trending downward, which was a welcome relief, especially for me because I just dropped a substantial amount into a information technology focused ETF, Vanguard's VGT. All right, so I was happy, to stop the bleeding. But again, I think because for those who are joining us, I think because of these new tariffs that are being thrown around out of the blue, I think this is going to cause the markets to continue being a little bumpy up until about Friday, Monday, start of a new month. We'll see what happens. But yeah, I thought that was, it's just nonstop with it's just nonstop with Donnie, man. I'm telling you. Sorry, guys. I got to have my coffee, man. Like, I got a late start. Nvidia seesaws as quarter four results come out. 2026 guidance tops expectations amid amazing Blackwell demand. All right. So one thing we have to keep in mind, okay? And I'm going to get into this in a moment, but Nvidia has a big partnership with Supermicro, okay? So we're going to cover this in a moment. So real quick, Nvidia shares seesawed and extending trading on Wednesday as a semiconductor giant posted fiscal fourth quarter results and offered up guidance that were better than expected, aided in part by the Blackwell line of GPUs. All right, the graphic processing units. All right, we're not talking about CPUs here like Intel or AMD. We're talking strictly about graphics. Basically, they did very well. They came out on top. The only thing that they missed was their gaming sector, their gaming portion of their business that came under. But they're using a lot. They're using a lot of their chips for AI. We've successfully ramped up the massive scale of production of Blackwell AI supercomputers, achieving billions of dollars in sales in the first quarter. AI is advancing at light speeds as agentic AI and physical AI set the stage for the next wave of AI to revolutionize the largest industries. All right. One thing that I really want to point out is the AI thesis. I keep talking about the AI thesis, right? What does AI look like over this next couple of years? And I've said it before, and I'll say it again. This current administration, the Trump administration, is very favorable to the crypto industry and to the AI industry. As a matter of fact, he's going to be I won't say dismantling, but I will say reducing the National Institute of Science and Technology, the NIST. He's going to be reducing and cutting positions there that regulate AI. So a lot of companies who are engaging in AI and AI activities, research and development, creation for hardware, creation for softwares, they're going to basically have the reins cut, and these guys are going to go wild. And some of the biggest players in the space right now, Palantir for defense, all right, for government. America needs to maintain its power, its dominance in AI. That's why when DeepSeek came out, it completely riled the stock market, because China came out with this thing and said, oh yeah, we created it for cheaper, more efficiently, way better than the AIs in America. And then, that completely riled the markets. Like, everybody was like, what the hell? Like, how did they come out with this AI for $6 million? And then you look under the hood, you realize it's crappy. It sends a lot of data to the Chinese Communist Party, to their intelligence agencies. They're basically harvesting and data mining your data. And then not only that, it actually costs way more once you looked under the hood. There was a lot of research by some other companies, and they basically found out that while DeepSeek was technically made for $6 million, if you look under the hood, it was actually like 234 million, if I remember the numbers correctly. Like, that's how much money they sunk into the research and development of that AI. So they might have created that AI for $6 million, but that's pretty typical of China. They over exaggerate stuff, and then once you start looking under the hood, then you realize no, they're kind of lying, which is what Supermicro kind of does. But anyways, I'll leave it at that. Okay, so this is Nvidia. And again, AI technology, I'm very bullish on the tech sector over these next 10 years because as the administration continues to basically help, this industry, the technology industry, the U.S. is going to maintain its dominance in the world as, the number one technology focused country. So defense, my point about defense and defense AI, we want to look at Palantir. Palantir is going to be leading the way. This is my idea. This is my thesis. I think that Palantir is going to be leading the way. You have Stargate. That is that big collaboration between, Oracle, ARM, Nvidia, Microsoft, and OpenAI to create, infrastructure, AI infrastructure for the United States. And definitely you can bet that, the government is going to be having a heavy hand in that development, right? Or at least guiding it. And then you have Apple that just announced another $500 billion in investment in AI. Now, a lot of it is for their own stuff. to create, more jobs, to create, better technology for their products, their AI, servers, stuff like that. But I think there's probably a deeper reason for that. And I think, honestly, that, the government, is going to have a hand in some of their, part of their cookie jar, I guess. So really, really, really interesting times is what I say. And this is why I'm really bullish on AI and technology for this decade. All right, so let's continue. So as earnings came out, Nvidia did really well. Post market or after market, it looks like it's doing, it spiked, but it looks like it just muted afterwards. So again, I think the tariff stuff is going to play a part in all of this. You can see here over the last 5 days and over the last month, we're just on a decline. So let's talk about Supermicro now, my favorite. You guys know that I'm not a fan of Supermicro. I think they're a very fraudulent company. The only thing propping this company up is their partnership with Nvidia. That's it. I don't think, yeah, they make good hardware, but I mean, the company it's laden with like fraudulent activities. The accounting firm, Ernst & Young, that is a very prestigious accounting firm. If they are firing themselves and quitting, that means they found a bunch of really, really awful things with Supermicro. A lot of questionable things. And again, Hindenburg Research already outed Supermicro and said that, when they got delisted the first time, it was because of their C-suite of executives, and then Supermicro fires a bunch of their C-suite executives. They get relisted back onto the NASDAQ, and then they rehire a lot of their C-suite executives that they fired. So this is why I do not trust Supermicro. I would not put my money directly into Supermicro. I don't care. I get if you're going to swing trade it just to, take some profit on it, but as a long-term holding, hell no. I just don't trust a company. All right, so let's get into this. All right, so Supermicro shares bounced back on Wednesday after filing its delayed financial reports to the U.S. Securities and Exchange Commission just ahead of its deadline on Tuesday to prevent possible delisting from the NASDAQ. However, Supermicro did admit to weaknesses in its internal control processes regarding financial reporting and outlined a strategy to remediate its issues. I mean, they're not going to fire anybody, so I doubt they're going to remediate anything. Management identified certain material weaknesses in our internal control over financial reporting. According to their 10K, a material weakness is a deficiency or a combination of deficiencies in internal control over financial reporting, such as blah, 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 blah. All right, word salad. The filings also help to resolve some of the concerns. All right, so this is coming from Goldman Sachs, okay? Analysts at Goldman Sachs. The filings also help resolve some of the concerns that I had about excessive share dilution due to the private placement activity that SMCI may have engaged in to strengthen their capital structure. Let me talk about this for a second. When a company goes behind the shareholders' back and issues out a bunch of shares to private placement, to private investors, either institutions or whatever, and the shareholders are not aware of this, that is questionable. That would kind of worry me, right? That their SMCI basically did that to make their balance sheet look better. And this is the point that I'm trying to make, is that SMCI, Supermicro Computer, is a very questionable company, and I would never put my money into them. All right. The only thing propping this company up, like I said, is Nvidia. All right. Said Seeking Alpha analyst Udom day inventory levels look good as well. SMCI is still not completely out of the woods yet, with multiple risks that still exist: litigation, credibility, etc., which could still affect SMCI's ability to file reports on time, as management themselves have stated as risks in their filings. What I also will be looking at is a deadline or the dealings of the Leong family and any conflicts of interest which may affect SMCI. This is the family, the C-suite executives that own Supermicro. Okay, like I said, they fired their executives and then they rehired them back once they got relisted on the NASDAQ, and then they got put onto the NASDAQ 100, and then they got kicked off the NASDAQ 100 again. They're still listed on the NASDAQ, still listed on the exchange. You can still buy them, of course, but man, I don't know. I don't trust this company. I keep saying that. Supermicro provides storage, server, networking solutions. Its annual revenue has increased almost exponentially over the past 3 years due to the proliferation of data centers needed to power the rise of artificial intelligence applications. So the data center piece, right? More data centers are being built. There's a couple popular REITs out there. One of them, or both being Digital Realty Trust and Equinix, tickers EQIX and ticker DLR. These companies are heavy in the data center space. And again, most people don't really stop to think about it, but whenever you make a phone call, you're hitting a cell tower, which is owned by a REIT. That cell tower is going to transfer the data through fiber that's owned by another REIT, and then all the way to the data center that's owned by a REIT. So again, it's fascinating to just know this kind of stuff. But you know, when we're talking about AI, the thesis for AI, data centers are going to play a massive part in all of this. So if you ever wanted to get exposure to data centers, you know, that's something to think about. You know, another one that's kind of been moving into the data center, you know, sector has been Iron Mountain, ticker IRM. They were a paper, like a paper storage, like a government paper storage repository. They actually purchased a mountain. This is why they're called Iron Mountain. They purchased a mountain that used to be a bunker, and then they turned it into like this document repository because, you know, federal documents, company documents, you know, for compliance reasons, they have to keep documents as old as like 7 to 10 years, and sometimes as old as 15 years. So this is where they're sending a lot of their documents to, is Iron Mountain. But it was just interesting. Again, you know, when you're looking at the whole bigger picture, the macro picture, and kind of what lays ahead for, you know, technology, you know, and then when you niche it down a little bit, you know, AI, and then defense AI, and then commercial AI, you know, these are the companies like data centers that are going to play a pivotal role. And then you look at the data center itself, you know, who's making the hardware? Well, Supermicro is making the hardware. Okay, what goes on to that hardware? Well, Nvidia chips, right? Intel chips. Okay, and then who's making the software, right? You're going to have OpenAI, you're going to have Palantir, you're going to have Microsoft, you know, you're going to have Google, right? So then you just kind of drill down and you can get a bigger picture of what's going on. It's just really, really cool. So anyways, Supermicro did really well, and now it looks like it's trending down. So again, they had this huge spike because they filed it on Tuesday, and then it looks like it's just going down. I think, again, investors are getting wise that this company is trash. All right, this company is garbage. I don't know. Like, if you got in right here and then you sold at the top, you would have made an easy 30% return on your money, but it's going down, right? And I know there's a lot of, there's probably a little bit of the audience in here that's, you know, cover call investors. You know, you can look at SMCI, you probably made out pretty well on that bet, you know, but again, holding this company long-term, I don't see it. I just don't see it. Again, this right here is right around when Hindenburg Research was publishing their information, and then, you know, you had Ernst & Young that said, I'm out, and then just complete stock decline. And I don't even know who this latest company is. I haven't looked at who their latest accounting company is, but yeah, there's YouTubers out there. This is what really ticks me off. There was a lot of YouTubers out there that were like, oh, SMCI, this is a wealth generational opportunity, you know, buy a lot of shares. And like, they're talking about right here, right? And then it just went down. And then, you know, some other YouTubers came out, oh, buy here is a good time. You know, just reading the comments, a lot of their subscribers ended up selling out because they couldn't take the volatility. You know, they couldn't take this. And again, the risk was super high these last couple of days for Supermicro. If they did not file on time, they would have got delisted, right? I mean, that's just a risk. That's just a thing, right? And look, it's trending back down. So we'll see how this goes over the next couple of months. Again, I don't foresee Supermicro ever reaching the highs that it had. But again, you know, who am I? I'm just some dude on YouTube. I could be completely wrong. All right, moving on. All right, so we're just going to look at the macro picture for the markets. We're just going to look at the macro picture for the markets. So we can see over the last 5 days, just crazy, right? Stock market was just getting beat up left and right. If we're looking at year to date, it's only up 2%, right? Not a whole lot. Like I said, if you guys looked at my community posts on YouTube, gold has actually been outperforming all asset classes. That includes the stock market, that includes the NASDAQ 100, that includes Bitcoin, and that includes real estate. Real estate is coming in second place. All right. So I think we're in for some more pain, especially with the whole tariff stuff, because you guys already know February was kind of a crazy month. Let's see, February right here, all because of the whole tariff stuff and you know, the uncertainty, the FUD. You know, forget Jerome Powell, forget interest rates. Like that's not even headline news anymore. Like we're talking about just strictly what the heck our government's doing, and we're chopping and reforming our government, you know, under this current administration. A lot of jobs are getting cut from the federal level. So interesting, like I said, interesting times, and it's only been month 2 into his administration. If we look at the NASDAQ, which is a tech-focused ETF, they have, I think, like close to 40%, or 50% straight to tech. But, you know, we see that, you know, they were trending up, and then I think this downturn right here was around the time that, you know, the news came out with the tariff stuff. So we'll find out if this really had any impact. But again, year to date, it's only up 1%. NASDAQ is only up 1%, not a whole lot. All right. So again, there's this whole thought, which I'm going to cover at the very end, because I think these are great questions. You know, could we be heading into a flat market, you know, for this year? I think that's a great question. I've seen that come up. There's a couple of YouTubers who covered this, and even, you know, you had the Bank of America, you had, I think it was, I want to say Goldman Sachs published an article not too long ago, I think a month ago or 2 months ago, saying the same thing. Like, this is what they're seeing, right? Or maybe it was Vanguard. I don't know. We should look at some Vanguard white papers. They're really interesting. If we look at Bitcoin, slaughtered. They are getting slaughtered. All right. Bitcoin is getting slaughtered. I woke up one day, it was at 95, and then I went to sleep, and I woke up the next day and it was just down to, what was it? 80 something thousand, 88,000. I was like, whoa, what a change. Right. And it's just been trending down like crazy. I personally think, and this is just a guess, I have nothing to base this on, just again, other YouTubers, other commenters, other people who are probably way more connected into the crypto space than myself. I think we're going to probably hit the very, you know, probably lower 80s, and definitely like high, you know, mid to high 70s. I could see Bitcoin probably retracting that far back. Again, I'm not connected to crypto like some other people. I just look at this graph. I just look at Bitcoin, honestly. I don't do the whole altcoin, meme coin, shit coin investing or gambling, really. I don't do any of that stuff. But yeah, when these people at least say something, you know, I just keep my ears open. But yeah, I mean, is now a good time to buy Bitcoin? You know, not too long ago, they were at all-time highs of like 106,000. And now this is just going crazy. And, you know, there is a thought that, you know, our current administration, current president is very favorable to crypto. We're going to be building this whole reserve of Bitcoin. Then you have several companies, you know, Strategy, MicroStrategy, you know, to name one, that, you know, basically became a Bitcoin treasury. And then you have other companies that are sort of rumored to be thinking about adding Bitcoin treasuries to their balance sheet. Right? They want to add Bitcoin to their balance sheet to help prop up their companies. GameStop, which you guys know of, you know, from the meme from GameStop mania of 2021 or 2020, 2021, whichever one. They, you know, it's just a rumor, but Ryan Cohen, who's the CEO of GameStop, met with Michael Saylor, and then all this rumor started happening about, you know, oh, GameStop's going to be buying Bitcoin, you know, they're going to be the next strategy and blah, blah, blah. But, you know, who knows? And there's just rumors out there that other companies are looking to adopt a similar strategy to strategy. Kind of funny there. Play on words. All right. So let's look at gold. Again, year to date, they're crushing it, right? This, if you look at these right here, this is telling me, just as an investor, as an outside observer, this is telling me that investors are worried about what's to come. Gold rarely, if ever, outperforms the markets, right? Rarely, if ever. So for it to start outperforming the markets this year, and I keep mentioning that 2025 is going to be the biggest year for investors, whether you're participating or not. If you're not going to win. If you are participating, you could probably bet that there's going to be some heavy volatility, definitely some losses, but this is going to be a make or break year for a lot of people. So you need to be investing, in my opinion, whether it's in an S&P 500, whether it's in a NASDAQ 100 ETF or Bitcoin or whatever. You need to get involved. Definitely be involved. This year is going to be crazy, especially with our administration at the helm. And you guys know from his prior administration that things change on a whim and the market reacts like crazy. So this is a great time, in my opinion, to be investing or invested. All right. So anyways, gold, again, this is just telling me that market sentiment is telling us that they're worried about the future. They're worried about maybe not the collapse of the US dollar, but definitely the dollar devaluing. They're worried about inflation, right? They're worried about these tariffs. They're worried about, is it possible or off the table that the Federal Reserve could possibly hike interest rates again? I said this not too long ago that it is, it's probably the lowest of the minimal chances of it happening, but it's not zero. It's not a 0% chance, right? And it all has to do with how these numbers are coming in. CPI, inflation, job employment, all that other stuff, right? But again, this is just telling me that a lot of investors are flocking to a hedge, right? Gold is a hedge against inflation, against currency devaluation. And it's just a hedge against, market macro forces. Again, you still have the war that's going on in Europe. You still have all the craziness that's happening in the Middle East. You still have the stuff that's happening down south. So, and the stuff that's happening in Asia, right? Specifically, what is it? The Pacific? That whole Southeast Asia area. So again, I don't know. We'll see. So U.S. Treasury, quickly, we'll wrap this up and then we'll get to the comments. All right, so let's look at the 10-year Treasury. Like I said, I like to use this as a barometer, as my kind of weather gauge for seeing how real estate is doing, or how REITs are doing rather. And it's trending down. Thank God it's trending down, because I've been in this crazy bear market for a freaking long time, and it's nice to see that this is finally going down. And we could see real quick that REITs are starting to recover, okay? That REITs are starting to recover. Again, 5% year to date, second best asset class to be in right now. But I mean, if we zoom out a bit, like, man, if you saw my portfolio, I was in the red for quite a while. You guys know this. I've shown you guys many times. But, it's nice to see this. I'm happy to see this. But we're still not out of the woods. There's still a lot of stuff. You still have the almost $1 trillion that's coming due this year. Extend and forget can only be done for so long by the big banks before they start feeling the pinch and before they start saying, you know what, we need to call your loans. We can't extend and pretend anymore. So Scott Bessent, who's the Secretary of Treasury, went on Fox News, a couple weeks ago, and basically said him and Trump are focusing on how to bring the 10-year down. They're not focusing, and they cannot influence the Federal Reserve. All right. The Federal Reserve is a completely separate entity. They cannot be influenced by politics. So they only have a dual mandate, right? Price stability and maximum employment. That's their only dual mandate. That's their only jobs, right? And the administration and the Treasury, they're trying to figure out how they can focus on bringing this down. And I don't know what, if any, that, they're doing or what they're doing to bring this down, but it's coming down, and I'm glad for that. I'm actually a little surprised that it is coming down because the whole thought of tariffs and everything spooked the market not too long ago. And that's what caused all these spikes. When, Trump was saying we're going to be tariffing the whole world, it was interesting to see now that it's actually coming down amid all this talk of tariffs. Let's see what this says. Nvidia CEO Huang says AI has to do 100 times more computation now than when GPT was released. This might be interesting. So again, AI is the future. You can invest in the hardware. You can invest in the data centers. You can put your money into a tech-focused ETF or a tech-heavy ETF. I did a video on this. The 3 picks were AIQ from Global X, IETC from iShares, if I remember correctly, and Vanguard's VGT. And I decided to go with VGT myself, full disclosure. All right, so that's it for the news sector. That's it for the news section, the news segment. I'm going to just check the comments real quick and then get back to you guys. So Oracle, hey man, welcome. Galveston County Mike says, hit that like button. Appreciate it, man. G bro, hey, welcome back. James Mag says, what's happening? A lot is happening, as you guys just saw. Eugene for Harmony says, did you have any alternatives to VGT? Could you have chosen Berkshire Hathaway, for example, or JEPI or Devo? So good question. I don't like Berkshire Hathaway, not because it's Warren Buffett or anything. I just don't want to buy Berkshire Hathaway. You can if you'd like, if you're a big fan of, Warren Buffett and his investing style. You can definitely go that route. I just chose to go with VGT because I'm basing my decision on investing in tech. Because I think under this current administration, like I mentioned before, very favorable to crypto and very favorable to AI, both of which are technology. As the administration continues to, deregulate the industries, remove some of that red tape, get rid of some of the bureaucracy behind it, I think a lot of technology companies are going to be free to innovate. And when companies are free to innovate, actually do what they have to do to continue pushing technology, the boundaries of technology, we as investors who are investing in these companies will be able to profit off of that, right? VGT holds a basket of 300-ish companies, all related to technology. I don't have to pick and choose the winners, or, I don't have to kick out the losers. The ETF is going to do it for me. So this is why I chose to go with VGT over IETC, which is excluding any foreign technology companies, because I don't care for global technology companies. I don't care for, any non-US technology companies. I don't really care for them. AIQ had the inclusion of, companies from China, companies from Europe, companies from Korea, all those other companies. Again, I don't care about those other companies out there. I don't think they can beat the US when it comes to innovation. So that's why I chose to go with VGT. You could go with IETC. I think they both offer really compelling return profiles, and reasons to invest in them. But again, you got to make that decision for yourself. I think, and you could also go with FTech. FTech is Fidelity's version of VGT, and they both follow a similar index. I think Vanguard follows the 2550 MSCI information tech, and Fidelity follows, I think, the 10100. I could be mistaken, or the 5100. I don't know. It's one of those indexes, but they follow pretty much identically. Fidelity just offers 1 basis point less on the expense ratio. So I hope that answers that extremely well. Adam Barrios says, and I wouldn't go with JEPI or Devo because those are cover call income investments. And I have, if you look at some of my prior streams, I talked about cover call investing, and I'm going to be releasing some videos here soon. I just got to work through them, all about cover call ETF investing. It is a fantastic niche with some very, very passionate communities, and some very passionate YouTubers. So I'm actually really excited to get those videos out, probably here in the near future. Adam Barrios says, I'm gray. Well, I'm gray too. China lied, says Jeff Walsh. Say it ain't so. Yeah, China has a history of just lying and making up numbers. Again, China copies a lot. They copy a lot of companies based in the United States, right? They copy a lot of what we do. But the thing they cannot copy, and it's because, and I don't want to bring in, politics, but it is because they're a communist country, right? They follow a communist economic way of running their economy, I guess, right? The state has to be involved in all their companies, whereas in the United States we follow a capitalist, way of doing business, right? Only the most innovative companies survive, and basically, if you are not innovating and the market doesn't like you, then you die. That's basically it, right? Whereas in China, everything is really controlled and highly regulated. So innovation is really, really tough in China. So what they do is they copy American innovation. But by the time they copy American innovation, it's already too late, right? There is a time and period where China was hacking a lot of defense sector companies and stealing a lot of our technology. But the thing that even though they stole all of our technology and all of our weapons technology, they can't create it. They can't. They don't have the chips. They don't have the semiconductors. They don't have any of that stuff, right? They don't have the companies like we do. So this is why, again, I'm very bullish on U.S. technology and U.S. technology dominance. So I hope, anyways, I know you weren't mentioning it, but yeah, China lies quite a bit. G-Bro says good info. James Max says, damn, that's wild.
Yeah, I need that coffee sip, man. Thank you. Thank you, Adam. I never looked into SMCI's backstory. Yeah, it's freaking horrible, man. Hindenburg Research. That's what started it. Look at Hindenburg Research. They're a company that exposes other companies, publicly traded companies. They exposed Block. They exposed Supermicro. They exposed it was they blew the whistle on I think Nikolai or Nikola Motors or whatever. They blew the whistle on them, and you guys know that I just published on my Instagram. Nikola Motors. I'm spelling it wrong. I know I am. Man, what was their ticker? NKHA, I think. Yeah, NKLA. So they just went into bankruptcy. Yeah, I put ETF. That's why. Yeah, they've been delisted. They're done for. They're bankrupt, right? But they blew the whistle on Nikola Motors, and that caused their stock price to go down because they were basically defrauding investors. This was during that whole EV craze. All the YouTubers, everyone, all the influencers was like, oh, buy EV, Nikola's the next Tesla, blah, 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 blah. And then now look at it, right? Then Hindenburg came out and then just destroyed it. As a matter of fact, I tried to research some of the old YouTube videos from 2022, 2021. Oh, it was 2020 actually. Yeah, I tried to research some of the videos where people were saying buy it, and a lot of them are removed. Like a lot of them are removed. It's hard to find even the videos where people are saying buy Nikola, right? So again, you got to be careful who you listen to and what you buy. But yeah, Hindenburg Research. Let's see. Oracle says I would buy SMCY this morning. I sold it an hour later for $4,000 profit and was done. Man, by far Oracle is the GOAT, man. Shares his trades. I really, really enjoy seeing his stuff. Like it's really well thought out, and doing the pre-market stuff and not buying until 10:30 in early morning. That's pretty much what I plan to do from now on, anyways. Jeff Welch says, I think Bitcoin is one crypto worth buying. It's not going anywhere. I agree. I don't think Bitcoin is going anywhere, but I think we're definitely due for a little more pain. So I'm just DCAing into a Bitcoin ETF, like I said. I'm not trying to time it or anything like that. I'm just picking up, getting some exposure. That's really it. If it goes up in value, great. If it doesn't go up in value and stays flat for a little while, or even, trades down a little bit more, no big deal. I don't have really a sizable portion, and crypto really never made up a big portion of my entire net worth or even my entire portfolio at any given time. I don't know. Yes, I believe in Bitcoin. I believe it's here to stay. I used to be a perma bear on Bitcoin and think like it's going to go away. But I mean, obviously I was wrong. But again, I mean, I'm not betting the farm on it. I will have some exposure just so I don't get the FOMO, because, there's been times where I'm like, man, I wish I freaking bought into it. And, then I ended up buying at like all time highs or something, and then it went lower. So, this is just a strategy to help me with, I guess, my own personal, FOMO, fear of missing out. Let's see. The GameStop thing was what got me into retail trading, says Jeff Welch. That's awesome. Yeah, that's what got me away from retail trading. I think you guys already know the story. I think you guys already know the story about me and GameStop. Like I tried to get in, I bought in on FOMO and hype, and I ended up losing like $9,000. So I don't do it anymore. G-Bro says scary. Well, guys, yeah, I mean, that was it, man. That was pretty much the stream. There is one last thing that I want to touch on, which comes here, right? So with everything we talked about, where do we go from here? With all the news that we just talked about, I keep seeing the same questions come up about, and I know some of you guys actually just asked the same thing. What should we invest in, right? With the markets going crazy, we don't know what's happening. There's a lot of FUD, a lot of fear, uncertainty, and doubt. What should we be putting our money into? And I kind of already touched on this. Again, I think even if you start with an S&P 500, I know this is cheesy as hell, and everyone always talks about the S&P 500 and blah, 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 right? 10-year returns, 10%, blah, 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 right? Okay. But at least if you don't have this as part of your portfolio, I think you should seriously consider it. If not, at least have some type of exposure to it, right? It doesn't have to make up 50% of your profile, your portfolio. It doesn't have to make up 100%. It could be something as small as, 15, 10%, right? Whatever it is, just have some exposure to it so you're able to capture that growth. You can also consider QQQ, which is the NASDAQ 100 equivalent. Or if you want to be like me and you're bullish on tech, you could consider something like a VGT or an FTech or an IETC or even an AIQ, right? If you want to make income off of your picks, there is cover call strategies for this. I'm not going to cover it in this video, but there are cover call ETFs that specifically target AI companies. So it might be worthwhile to have something like that. If you're not investing, you should definitely start investing, all right? Period. Like there is no rhyme or reason why you should have all your money in a bank account. Savings account are garbage. I've said this many times. Savings accounts are garbage. Don't put your money in a savings account. I get if you want an emergency fund, but there's, I've heard stories, read posts and things like this, talk to friends who work in the industry. And, they talk to people who have like $250,000 in a savings account, right? And meanwhile, their portfolios are like, $100,000. Like that is insane to me. That's crazy because you're missing out on all the potential gains, right? Even if we trade flat for a year, or maybe let's say we trade flat for 2 years, whatever it is, well, consider an equal weighted S&P 500, right? You guys can look that up, like an equal weighted S&P 500 where we're not so heavy to the Magnificent Seven. So another question I keep seeing is, do you think now is a good time to invest? My answer is yes. The best time to invest is yes. Like there is, it's one thing if you try to time the market, you're going to be waiting a long time. Right? Because people are going to wait. They're going to see a dip like we just had, like we just had right here. They're going to see this dip. Let's use Bitcoin as an example. They're going to see this dip and they're like, oh, it's too risky now. Like, I don't want to lose any more money. I'm going to wait for it to go lower, right? Let's say it starts trending up and it goes back to $106 or $106,000 or even $150, right? I don't know. Nobody really knows. But let's say that happened, right? And now the person's like, well, I'm going to wait till it goes down again. Again, this whole wait and see thing is a bad idea. In my opinion, what you should do is come up with a strategy to at least have a small little position, come up with a strategy, put a little bit of money here and there. You don't have to bet the whole farm on it, or I'm not specifically Bitcoin, but an ETF of some sort, right? Take the guesswork out, invest in something to get started. Now is a good time to invest. I said it before, 2025 is going to be a spectacular year for investors if you position yourself correctly to take advantage of the opportunities that will be showing up. Okay. And how you can take advantage of those opportunities, have cash available. All right. You can dollar cost average if you want into an ETF just to get some exposure, just to get some of the gains, collect on future, gains, whatever. But have a sizable cash portfolio or a sizable cash position available to take advantage of opportunities when they come up. Okay. Another idea, if you're that scared to invest, usually fear is a lack of education. So educate yourself on investing, educate yourself on all these different cover call strategies, educate yourself on investing in tech, like educate yourself on long-term investing, on buy and hold investing, like educate yourself. And then you'll come to find out that, now is definitely a good time to invest. It's just my 2 points. Will Bitcoin go lower? Again, I covered this kind of already and nobody knows. There's no crystal ball anywhere. Anyone who says anything is predicting and just, kind of just fluff. Even me, I think it's going to go to 80K. I think it'll go even as low as 75, but I'm not basing this on any facts or data or crypto winner or, crypto bull runs or any of that crap. I'm not basing this on historical data, none of that, or, the Fibonacci curve and all this other crap that goes along with all, trading. I'm just basing this off a best guess, right? I don't know. Based on what other people are saying, I think it'll go down to 80K. I think it'll go down to 75. But I'm still going to just be putting a little bit of money here and there just to capture some of the gains for when it recovers sometime in the future. I don't know when. So this was an interesting thing that I came across, right? And this plays into the whole Bank of America paper that they published. and the whole equal weighted S&P 500 thing. And then in another community, from Oracle, I don't know if you're still here, but in his, he also brought this up. And another YouTuber, Dividend Nomad brought this up as well. Basically, the net is, is the Magnificent Seven stagnating, right? Facebook, Apple, Amazon, Netflix, Google, Nvidia, Tesla. Are these companies stagnating? You have Tesla sales declining because of basically his closeness with, President Trump, and then, him giving his heart out. So, I mean, is Tesla, declining? Who knows? I mean, there's a lot of anecdotal notes out there. I haven't looked at their balance sheet at all. I don't know if their sales are going into the tubes in Asia or Europe. I don't know, but could they? Absolutely. Same thing with Apple. You have newer phones coming out, newer technologies coming out that are actually better than Apple. And Apple, the thing I like about Samsung over Apple, and why I've always been an Android fan, is because Android phones, when they upgrade or when they come out a new phone, they come out with a new phone. It's not just the same hardware with like a tweak to a button, right? That's been Apple's like playbook for many, many years. They have a die-hard fan base that will spend any amount of money to get the latest phone, right? But the phone will have a minor update to the hardware. Not much, a minor update, right? This is why there's that meme out there that, by the time Apple came out with, three lenses on their phone, Samsung and Android's already had that for like 2 years, right? So again, just, you have to look at these companies and ask yourself, are they stagnating? I don't know. I don't have an answer for you. I think, as an investor, I would probably position myself to take advantage of, an opportunity if they are stagnating. This is why I would go with an ETF, a tech focused ETF, because if those 7 stagnate, that's okay. There's freaking 300 or 297 companies that can prop up and take over the Magnificent Seven, right? Or there might be other companies that are developing better AI, better phones, better, et cetera, right? That just completely take over the Magnificent Seven. Maybe the Magnificent Seven end up going the way of the dodo, just like, other companies have in the past. We live in a capitalist society. I don't see them ever going away, to be perfectly honest. But maybe their growth is going to be muted, right? It's hard to, innovate and develop nowadays. How many different search engines can you create, right? How many, different applications can you create for Gmail, right? Everything is kind of moving away from the whole, Web 2.0 to like Web 3. And Web 3 is going to be heavily, blockchain based. So maybe that's the wave of the future. I have no idea. But could the Magnificent Seven be stagnating? It's a possibility, and it definitely warrants further research and definitely something to keep an eye on. But as an investor, as someone that just wants to be positioned, I would probably go with an ETF. I wouldn't invest in individual like single stocks like Amazon, Apple, Google, Facebook, all those other ones. Personally, I wouldn't invest in single stocks. I would just go with an ETF version. So what should we do? I kind of covered this all over these. Again, position yourself to take advantage of opportunities. If you're not investing already, you need to start investing as soon as possible. Open a brokerage account if you haven't done that. Research what the S&P 500 is. Research what REITs are. Research what ETFs are. Research what dividend ETFs are. Research what cover call ETFs are. Research what commodity ETFs are. Research what dividend, like, just the more reading and the more research you do, the more comfortable you will be with this type of content. The more comfortable you'll be with making really large bets, like dropping 170K into something like VGT, right? And then seeing it go down $10,000 within a day. So you'll be way more comfortable with these types of moves the more you expose yourself to this type of content and this education. So I hope that addresses those questions very well, because these are the questions that I see all the time. Not just, definitely not on my channel or in my videos, but I see them in like Facebook posts. I see them in, X posts. I see them in Instagram feeds and freaking other comments on other YouTube videos. And these are the ones that I keep seeing. And I think, people are looking for the answer, but the answer is there is no answer, right? The answer is you just have to keep educating yourself, keep trying, keep looking around, keep an open mind, and don't pigeonhole yourself in one camp or another, right? In one bias or another. So I hope that addresses that exceptionally well. All right, Fun Life says, yeah, when you are young, it's always good to invest. How you do is up to you. Start simple. ETFs are amazing. Absolutely, 100%. Tesla sales are tanking in Europe, says Jeff Welch. Yeah, I agree. There's again another YouTuber. I didn't check into the data myself, but yeah, he said the same exact thing. Europe, I guess people are putting a bunch of swastikas all over Teslas, and people are like vandalizing Tesla dealerships. So yeah, pretty interesting. Jeff Welch says, yeah, don't sweat the VGT. The tech sector dips heavy but rebounds fast, and that's what I'm hoping for. But we'll see. If it continues going lower, I might start sweating a little bit. But guys, we are at the top of the hour. I hope you had a lot of fun on the stream. I hope you guys got a lot of value from this stream. I hope you enjoyed it. Please like, subscribe, comment if you haven't already done so. I read every single comment, and I appreciate your guys' support, because without you guys, this stream would pretty much be nothing, right? I'd basically be talking to nobody. But I appreciate you guys for showing up, showing your support, and just listening to me ramble about the stock market and stock market news. So with that, guys, I will see you guys. You have a great night wherever you are in the world. I'm going to get my day started. I need to drink my coffee, hit the gym. All right. Keep on with these 2025 goals. All right. Again, 2025 is going to be a great year for a lot of us. All right. Keep at it. Don't give up.